Hey everybody, good morning, morning Jason, morning Michael, morning Craig, morning Dan, morning Michael, other Michael, and other Michael. Three Michaels. Michael. Morning everybody, glad to see you. How are we doing? Good. Now, if you want to chat with me, all you got to do is be a subscriber. Click the subscribe button while I'm live. We've got a live chat going. And if you tune in later after I'm not live anymore, well, you can leave a comment. I'll get back to you. Or click the link in the description and come join us in Discord and chat with us. So I think most people are in Discord that I see chatting. Hey, Sledge, how you doing this morning? Whew. This weekend, pretty chill. I mean, crypto definitely not pulling out of the funk. Well, I mean, SEC went full nuclear war on crypto, in kind of enforcing rules that aren't even clarified yet. So Coinbase countersues the SEC, trying to get clarification on the rules, how to be in compliance. So they had already filed, asking for how to be in compliance, and the SEC just ignored them and then sued them. So that's kind of the craziness going on there. Morning, Kevin. Morning, Valerie. Morning. Not even sure how to see your name. I'm sorry. Morozio. Yeah, my East Tennessee. That's not a common East Tennessee name. I'm sorry. Al. Morning. Kimberly. Morning. Francois. Andreas. Arturo. Morning. Everybody chiming in. So, if you want to get notified when I go live every single morning, make sure you hit the bell with the little doodads. And, while you're at it, might as well give me a thumbs up if you like what I got to say. Jacques, I think I said that right. Morning, Alan. Morning, everybody. Lots of chatters this morning. Love it. All right. If you got questions as we go along, morning, Penny, let me know. I'll do my best to circle around and hit your questions. Remember, request day is Tuesdays at 5 p.m. I do requests, so not really looking for requests during this live stream, but if you got some questions about what I have to say, make sure you hit me up. Anyway, all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. Just because I get something right doesn't mean I ever will again. I may be completely full of crap. Keep that in mind. Just like all the mainstream media out there, this presentation is intended to be informational, educational, and fun. Hopefully you're having fun. And is not a recommendation to buy or sell anything, financial instrument or otherwise. If you desire personal financial advice, hire and consult a financial advisor that has a fiduciary duty to give you advice based on your financial situation. Now, the big thing coming up this week, Monday, today, relatively benign. We have a 10-year bond auction coming up at 1, and we have a balanced budget at 2. But tomorrow, before the open, 8:30 in the morning Eastern Time, CPI. That's been a market mover all year so far, every print we get. Then on Wednesday, 8:30 in the morning before the market opens, PPI. That's been a market mover every month so far. Then we get crude oil at 10 or 10:30. Then we get the FOMC. So that meeting starts tomorrow. They start on Tuesday. It's a 2-day meeting with a rate change announcement at 2 o'clock. And then Jerome Powell cannot resist getting on the mic at 2:30. Be careful. That can move the market like crazy. Wouldn't surprise me if they did another quarter-point rate raise because they're arrogant. Anyway, then on Thursday, we have core retail sales, Empire State Manufacturing, retail sales, unemployment claims, Philly Fed, and import prices all coming in before the market opens. That, despite, even with whatever happens with the rate change announcement and then whatever Powell says, that can be another market mover right there. And then Friday, we're getting at 10 a.m. after the market opens, we're getting consumer sentiment and inflation expectations. This is a week not to be missed. Tons of economic news coming out. We have a ton of reactions likely to happen. Also, FOMC member Waller going to go out there and speak too. You can't let Powell be the only one speaking. So, there's other stuff in here too. Industrial production. It's a ton of economic news and numbers coming out this week as we try to wrap up the first half of 2023. First half. Can you believe it already? This is opex week also on top of all this. Opex, what does that mean? That's options expiration. We have quad witching, and really it's almost more than that. We have the futures expiring. If you're going to see a jump in the futures charts because the contract's rolling over. The contract that we've been using for months, the June contract, is ending this week, and we have to move to the September contract. That creates a price difference. It's not unlike options. There's a time decay in futures. The delivery for the June options is this week, and the delivery is in cash. So the price difference between the futures contract for June and the S&P actual cash index has come down almost near zero, and we're going to have a gap, kind of a theta decay gap that opens back up as we move to the September contract. Like I said, you'll see it in the constant contract that I use. We kind of jumped up quite a few points, but it's not really a true jump. It's just that theta getting added back in there as we roll forward. So you'll see a futures gap, price gap in a bunch of the charts as I go through that. Now, why futures? Because they trade 23 hours a day, 5 days a week, only closed from 5 to 6 p.m. Eastern on Monday, Tuesday, Wednesday, Thursday, and then Friday they close at 5 p.m. and reopen on Sunday at 6 p.m. So, hey, morning, Laughter. Glad to have you. All right. So IWM has something special going on. They are actually reconstituting that index like they do every June. So there's a little bit of special stuff going on with that one right now. Makes it a little less tradable until that all happens and shakes out probably next week. So just let you know on IWM and Russell. So not only is the contract rolling forward, but you're also getting a reconstitution all at the same time on the Russell 2000. All right, moving on. I brought a ton of stuff to talk about this morning because things are getting a little crazy. So let me pull up my thing right here. Just weeks after capitulating on stocks, retail buyers are back with a vengeance. So actually we see retail jumping in, aggregate purchases, they kind of plummeted out, and now we're coming back. And that is to the tune of about $1.3 billion a week. We're dumping more money in. Now some outperformers. Zoom this up. Check this out right here. This is where the money is going from retail. We're seeing some outperformers, best performers right here on FU, SoFi, in TNA, CVNA. We saw Carvana popping like crazy. MDB, Mondo, that one's been popping, and Roku. Now, some of the surprising ones, we see TZA down here, Coin down here, NVIDIA down here, T-Mobile, Micron, and ANET down here as worst performers. You got a bunch in the middle that aren't labeled. Then we also see some highest conviction ones that aren't really moving. So Apple, TLT, EMB, Rivian, IEFA, Verizon, IVV, and AT&T right there. And then bank themes down here. See, this is net inflows right here. We're seeing net inflow out of banks, or net outflow, I guess that would be. Negative net inflow. So banks, even though Citigroup is performing their net outflows. So, all right. Any questions on that one? That's where the retail money is allegedly going right now. Now, what does that mean? Well, as they call us, you and me, the retail investors, they call us the dumb money. So I don't know if that's entirely true or not, because I tend to get it right more than the talking heads do. But you know what? When everybody tips the boat one side, we tend to go the other way. Now, this is interesting too. Bears capitulate. Goldman, who is usually on the bear train, joins the bull parade. They raise their price target from 4,000 to 4,500. This is kind of interesting here. Now, to note, right down here is their price prediction right here. Usually when they raise their price target by some crazy amount, the market does the opposite. So back here in 2022, well, in 2021, they were raising their target for 2022 up to 5,100. And then we started rolling over. And in February 12th, they revised it to 4,900. And we kept dropping. Then March 14th, they raised it to 4,700, back to near the all-time highs. And we came up and kept on dropping. May 14th, still bullish, 4,300. And still dropping. Then we kind of squeaked it out there. They were right. Hey, we were right. Look, we got near 4,300 and then plummeted out. Then on September 24th, Goldman Sachs cuts their price target to 3,600 for 2022, and we bottom and start going up. And then February 6th this year, they revised to 4,000, and we kind of dipped down there and kept going. And now they're raising their price target higher for 2023. I mean, this is all year they expect this thing. I'm sure we'll probably go see 4,500 sometime this year, but right now, with this move up from March 13th up through now, this is likely that we see a pullback. I mean, look, this thing does not go any one direction. I mean, it just doesn't. Like, we get exhaustion and then we pull back a couple hundred points. So please be careful. Please, please, please. Don't listen to the talking heads. They can be completely full of crap, as we proved over and over and over. So, Zero Hedge on Twitter here, poking fun that Wilson and Marco, those are two analysts at Goldman Sachs. When they turn bearish, when they turn bullish, this thing's going to roll over hard. So be careful on that. Anyway, moving on. This is interesting to me. Look at this. For all those talking about not a recession, this is cardboard demand. So cardboard box shipments, 3-month moving average. Look where these things bottom right here. Before the dot-com, during the dot-com, during the Great Financial Crisis, and now. Back here in 2020, we didn't see any. The COVID didn't have any kind of major spike down. But right now, this to me says we're in some sort of recession, or we've been in recession. This is cardboard box demand. What do you buy that doesn't come in a cardboard box? Almost nothing. At least, even stuff that comes in a bag is probably overpacked in a cardboard box before it gets to the store. So keep it in mind that we may be coming out of the bottom of this thing. Now, some other reasons I say that. This is world semiconductor demand and shipping and sales here. So the white line, the right-hand side, is world semiconductor sales. We're kind of coming out of a bottom here. 2018-19, that was kind of one of those little market freakouts. Back here, 2008, 2009, another one of those little freakouts. We're potentially rounding the bottom. Everybody says chip shortage. Well, we went through the shortage up here, but now we've gone through a demand bust down here, where orders and sales are at, way below. We're way below. I'm like 20% year over year, 12-month change. We're down 20% on sales of semiconductors. This thing has the potential to round. We don't usually see a flat and then continue on down. Sometimes we get a little bump and then down, but we're down near the lows. So we could see semiconductors rounding the bottom, but this is not like an immediate thing. This is like wait till a pullback, then jump in, because we could see semiconductor demand launch off here. Now, also, another interesting thing here, bond correlation going back positive. This indicates that quite possibly we saw this recession happen back here. And we're working on coming back out of it with bond yields, real bond yields, real 10-year yields going positive again. So actually jump into something we can use. S&P 500. This was the open on Sunday right here. This gray line. This is the open. That was the open Sunday, 6 p.m. last night. This is the midnight rollover right here. We saw a spike into the early hours, then a pullback. If we break out over that high, which is sitting roughly at 43.23. This is on the June contract, not the September contract. If we see that break out over that high, we could launch off. All right, this can go up to this 43.34 area or even higher. Now, looking at NASDAQ, this is just looking at the micros. We don't usually look at, this is pulled off my other platform. We'll look at live charts here in just a second. Right now, NASDAQ coming up. We made a high back here on, I think it was the 4th or 5th. This is a 4-hour chart. Now, the last one was a 30-minute chart. We came up shy of getting that new high Friday, and we're still short of that high here this morning. If we push higher, we could see upwards of 14,800, but we could roll over very easily. This is kind of a measured bounce type situation where we've came up short, and we can see this thing push down with a vengeance very quickly. Be careful. Remember, all that economic news this week, this thing is primed, both charts primed for a pullback that we haven't seen in months. All right. I keep beating that drum. I beat it all last week. Please be careful. That doesn't mean we don't grind high, keep on grinding higher, but the higher probability is that we see a pullback off these levels. So, all right, moving on. S&P chart. Let's pull this one up, talk about it. Let's refresh this because I changed all these drawings, and we probably can. There we go. There we go. So this might happen. We might grind on higher. This is the actual cash index, not the futures numbers now. We might see us grind on higher, but that's not extremely likely right now. We had huge resistance right here from the August high, and we're coming right up into it. Most likely, as we see a pullback, to go retest this area of resistance where we couldn't break through for months. That would be classic. We'd go down there, retrace, retest it, find support, turn higher, and then work toward a new all-time high. That's the most likely. Now, might happen is that we roll on up here. That makes me extremely cautious. If we just keep on rolling higher, you know what happens. Eventually, we get the pullback, and it's much bigger and much more severe than it should have been. And there is the possibility that we could go see a lower low than what we saw in October. Entirely possible, especially if we keep grinding higher with nary a pullback. If we don't get in one of these nice big pullbacks here and freak everybody out, we're likely to see a large outsized pullback. And there's the market open. So please, please, please be careful on the next few days, especially with all this economic news. Anything could be a scary rug pull type situation. S5FI still hanging out in the middle. No decision there. NDFI still hanging out near the middle. No decisions. This is all just kind of consolidating right in the middle. It's a big coin flip zone. We could break out, we could break down, but with the way that we've come up into this high, I think that we're going to need to see a pullback. Now, here's what I was talking about on the live ES chart right here. We're getting that contract rollover and that little bit of pop. One way to, let's look at this a different way. ES1 exclamation point minus SPX, right like this. What you can see right here is when the contract rolls over. And these red and green bars are the overnight action. The kind of, if you will, the line that forms in between here. This is the decay on that option contract. So we got the rollover back here in March. We decayed down towards 0, and then we roll over up here. We're going to see it again decay down towards 0. We usually get up to about a 35 point difference. Right now we're running at 47 point difference between the new ES contract and the SP 500. So there you go. That's how you figure it out. All right, we get this pop, and then that's the decay that happens every time as it drops off towards 0. It's not a perfect line, but it's fairly consistent. Right like that. All right, if you've never seen this before, hey, welcome to something you can do. ES1 exclamation point minus SPX, and that shows you the delta difference and how it decays as we get near the end of the futures contract. So ES1 is a constant contract. It does roll over automatically and move to the next month as the futures contracts expire. Now, if you wanted to look up You're like, JT, what's the current contract? ESM 2023 takes you back to the June contract right here. And we can see it come in 43.15. And if we pop down right there, we got to stay under this high. If we break out over that high, we can go higher high. If we stay under that high, we can start pushing lower. So some interesting other things. VIX coming up off the lows pretty significantly. Now, there's other people kind of expecting some volatility this week. I was beating on it all last week when we were down here. Now we're starting to see a little push higher. People are like, oh, you know what? There's a ton of economic news coming out. You know what? We don't know if the rate change is going to happen. You know what? We don't know all these things that are going to happen this week. CPI, PPI, consumer sentiment, retail sales, all of this stuff coming out this week that can create volatility. VIX highly likely to come up and revisit this area right in here. We saw just a few days ago, if not up near the highs up here around 20. And we can easily see a spike up in that zone. Please be careful. Please, 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 please be careful. All right. Moving on. NASDAQ, again, has the gap in there, still pushing higher. We have resistance up here at 15,000. And sometime before long, we're going to come back down to the daily roadmap line. Same thing on ES. We're highly likely to come back to the daily roadmap line at some point in the not too distant future. And then Russell actually trying to break out here. A different story. Now we do have the reconstitution. We've got the contract rolling over, which we don't have a big gap in Russell, interestingly enough. And we came up, found resistance at the 618. If we can push right on up through that, get above the 1930, 1940 area, we're probably going to see Russell run right up into the 2000, possibly 2100, maybe even 2200 area, right up here. This big old fat target that I've had on the chart for a number of months. This is positive. This one's lagging. Everybody else, NASDAQ and S&P sitting up here near their August highs. Russell sitting way down here with the potential to catch up and maybe even outperform to the upside. Now, oil decided to be goofy and drop right back down. We may, if we don't hold a higher low, we may get an extension. That extension could take us down to 65, possibly even down into low 60s, 62, even 59. Those are entirely possible if we don't hold this support area right here, this orange box. At this point, it's just a retest of the orange box. Fake breakout so far. Just kind of sitting on my hands on that trade, just waiting. GC still looks like it wants to roll over. This is gold futures. That CL was oil futures, like crude in the US. Bitcoin sitting right above the daily roadmap line. This thing can get a pop all of a sudden. It can just get some legs, and it doesn't have to make sense. There doesn't have to be like a narrative change or anything. This thing could just go popping off. You'd be like, what the beep happened? It can entirely happen. All right, the price chart here supports breaking out, going higher to about 32,000. Ethereum also finally jumped down, touching the roadmap line. I'm just using the futures charts. The actual cash chart's a little bit, slightly bit different, but the future chart's good enough for me. This one also jumping down here, may extend on down and get a measured bounce type setup, but it doesn't have to. This Bitcoin and Ethereum are not aligned in their price pattern right now. So just be aware that even if Ethereum goes deeper, Bitcoin could go popping off, or vice versa. Dollar just churning right under the roadmap line in the support box. If we start breaking down through 103, probably going to see it return back down to here and potentially go lower low, down below, maybe back to 100, if not below, down to 99. All right. This list. Yeah, that's the right list. CCL. Look at that nice pop today. That probably getting near played out. Yep. I wouldn't expect much more than 15 on this pop before we see a retrace. So if you're chasing that one, if you got into it back here on the breakout, and then a good spot to be looking to book or protect profit right there. It can easily find resistance at that 1618 and come right back down here to the point from where it broke out. Very classic. Apron, doing a stock split, 12 for 1 or 1 for 12. I get reverse split. Reverse splits are not bullish, despite that making the list, because of the stock splits. Stock splits are inherently bearish and probably going to go lower low. KDNY, huge pop right there, ridiculous, 56% pop up. That's probably way above targets. Let's run the pullback here. This is a pharmaceutical biotech. Yeah, that's ridiculous and probably going to retrace if it's not some sort of buyout or something like that. So yeah, I'd be careful on that one. Oracle, nice pop right in, basically hitting the target. I wouldn't expect much more of that out of that for now. That's 118. It could keep on trucking up to 134, but right now I do highly expect a pullback off of that zone before we get the energy to go even higher. Those were the targets off of the big pullback that we did from December through the lows back in October. So this one's outperforming all-time, all-time new highs. Well, I don't know about all-time, but it is new highs. Yeah, it looks like all-time new high. So that can extend up to 134, but be careful. EMPH getting slammed a little bit, having trouble trying to break out. Zoom this one back up. We tried to break out through the trend line, couldn't do it. My target has been down here around 110 for quite a while. Couldn't even make it up to the roadmap line. Just be careful. We did a little excursion up and then got a huge drop. This one can quickly push lower. Down around that 110 area is where I kind of expect it to go. Back to the lows. If not, pushing down even lower. It may be able to find support right in here. So JPM is potentially going bullish here. 150, 157 on the upside. Banking does have some caution to it still. NDAQ, ouch, right there. NASDAQ Incorporated. This is the company that runs the exchange. Getting a little slam down. That can hold support there at that low. Nothing for me to do there. TOST, Toast Incorporated. Well, that looks like an entry for a long to 28, possibly 32. Held support, popping, getting above resistance. Does have that little gap down. That may create some resistance right there. Breakout above that, 28, probably 32 on the upside. Anthem or I don't even know. Actinium, looking like dangerous chart. Pharmaceutical. Phantom pharmaceuticals. Pharmaceuticals just dangerous, man. They do unpredictable stuff, chop around. Although they're all moving this morning, looks like all these ones on the list. Illumina. I don't even know what this company does. Looks like another biotech. Gotten slammed down. Money's getting expensive. They don't lose money. They don't really make a lot of money. Got a lot of revenue, but they don't make a lot of money on that revenue. I'd be cautious. They can definitely pull on down. ASML hit the target. And at some point here, it's going to pull down, although it could extend on up to 766. This is not one that I'm trying to mess with right now because it is due for a bigger pullback. After that monster run there, well, that could be the extension it needed to get out to 750 to 760. It's going to be due a larger pullback. I mean, it gets them. Look, right there, already this year. So at some point right up here, we're going to find resistance and get one of those larger pullbacks. Be careful. The market is set up for pullbacks. ADBE also trying to break through the resistance. These highs right here, we get on the upside of that, we can go higher. Although with the way everything's set up right now, it looks like it's probably going to turn back down a little bit. Go retest this support before we get that next breakout. BIIB, another biotech, doing some crazy stuff. Looks like the next extension higher potentially would be up here around 328, possibly 350, which interestingly enough, we had some resistance right over there before. We may go up and pop and hit that on BIIB. NVIDIA, just churning. This is another one that is due a monster pullback. We left a huge gap here and came up and hit targets and stopped. Highly likely that we see a large pullback on this one in the not so distant future. Please be careful. AMD also way up here at extensions. Highly likely that we see a monster pullback. Now that one did a monster pullback and then a monster super fast pop right up to the targets. I unloaded my positions, and please be careful. It does not have to keep going. The AI narrative does not have to keep, rocking it. SMCI, highly likely after that exponential move to get an exponential return right back down. That's a bubble type move and can pull right back down. If you don't believe me on NVIDIA and AMD that they can get that monster type pullback, just look over here. Last time we did exponential type stuff, and you can keep going back in history and zoom up this thing. Every time it kind of does this exponential thing, it does a monster pullback. Please be careful. This one was a pullback and then a sideways for a long time. So if you don't think it can do that, look at that one. Crazy up and crazy right back down. Even left gaps. So don't think that just because they build the shovels for AI that it has to keep going. This is 37. Right now we're hanging out 37 times their sales. 37 times their sales. Not even their earnings. We're not even talking earnings. We're talking sales. 37 times their sales. They're probably highly likely to get a pullback. Looking at Bill. Wow, that one can, came down to support, popping back up. This one can break out if we get above these highs right over here. Get a move up through that stuff. Potentially going up. PXD, just churning right down under here. We get a breakout. I have my alert right at 220. That's where I'm going to be looking for, going long for this move up to around 290. So just waiting on oil probably to get out of the funk. Then KMX, nice. Came back up to resistance. KMX, Carvana, both kind of starting to look positive again. The used car market, CVNA, kind of coming around a little bit. And remember that, Philip, come back tomorrow, 5 p.m. And Maurizio, 5 p.m. tomorrow. I'll take your requests. This morning, I'm just looking for stuff moving. Tesla is at resistance. Probably going to get that pullback. Right back to the roadmap line, back to 200. Highly likely. And PLTR, I'm bullish on that one. Targets up here, 21, 22. And let's see, I got a little heart symbol over top of the ticker. And Oracle, I already covered Oracle. That was already on the list. Rewind and look at it. All right. Oracle was right back up here. This was live. All you have to do is just pull the thing back till you get back to Oracle. So already talked about it. All right. Bias for the day. That's what everybody really wants to know, right? What's the bias for the day? I am extremely cautious. Today, we may do a little blow off top. Could happen. We may start the retrace. It could happen. Just super cautious. That's my bias. Super cautious. All right, right now, I expect Tesla to pull back. I expect a lot of things to pull back. Why? Because we haven't really done a pullback since back here in March. We've just been up, grinding higher, got to extensions, we got to the target. You might be like, well, you don't know what you're talking about. Why is that the target? Well, it's been the target. Go rewind. Watch. I've been talking about this target for 6 months. We got here. And we did it in a manner where there wasn't really a pullback. We were out of gas. The idiot light's on, the low fuel light on. Be careful. We can stall out, have a nice big fat retrace. That builds a lot more market energy back into the market so we can go higher. I expect a retrace. There's just too much economic news piled up this week that we don't see some sort of retrace, some sort of volatility. VIX was at 3-year lows. Now we're seeing it pop a little bit. We can expect VIX to pop even more. I do have a significant position in VIX and in short VIX, which would be long VIX, double negative there. So please, please, please be careful. The account you save may be your own. That's it for this morning. I'll be back with you again tomorrow morning for Morning Monster. Got my pineapple monster this morning. And we'll see you. Be careful out there. Be careful. We got